It's been quite a busy time recently. Bitcoin has seen interesting advancements alongside unexpected news from Ethereum. We're also going to take a look at crucial regulatory shifts accompanied with substantial changes unfolding within the realm of Bitcoin miners. Let's dive into the latest trends in the crypto market with GoMining. During the past 7 days, Bitcoin has traded within the range of $65,005 to $71,464, narrowing the gap from March 14th all-time high to just -8%. With Bitcoin's price on the rise and the hype surrounding Ethereum ETFs, US-based Bitcoin ETF funds have started attracting significant investments again. Over the past 7 days, there has been a steady inflow of capital, with daily investments exceeding hundreds of millions of dollars, peaking at $315.8 million on May 21st. The U.S. Securities and Exchange Commission, or SEC, has approved applications from NASDAQ, CBOE, and NYSE on Thursday to list exchange-traded funds tied to the price of Ethereum, giving the green light for the products to be traded later this year. ETH prices have increased over the past week, trading between $2,934 to $3,913, pushing higher after the SEC directed issuers of potential ETH ETFs to update their 19B-4 filings urgently and remove provisions related to staking. In light of the SEC's approval of 19B-4 forms, the agency is expected to work with Ether ETF issuers on S-1s over the next few weeks/months. After this, the S-1 registration statements will become effective, at which point trading can begin. In the midst of all this hype, open interest in Ethereum futures reached a record $15.65 billion on May 23rd, an increase of over 40% in 1 week. The boost in ETH's futures open interest, coupled with a positive funding rate, indicates increased investor engagement and overall positivity towards the asset. Meanwhile, U.S. lawmakers took a significant step forward by approving FIT21. This legislation lays out who's responsible for policing cryptocurrencies, effectively shifting main oversight duties from the SEC's jurisdiction mainly to the Commodity Futures Trading Commission, or CFTC. With backing from both sides, this legislation saw approval by 201 Republican members alongside 71 Democratic colleagues. In contrast, resistance came primarily from one party, as only 3 GOP members voted against it, versus over 133 opposing votes cast by House Dems. This happened despite the SEC releasing a statement right before the vote, where it claimed that FIT21 would create new regulatory gaps and undermine decades of precedent regarding the oversight of investment contracts, putting investors and capital markets at immeasurable risk. This is a rare situation in which a top financial regulator tries altering political tides publicly like this. The Biden administration also issued a statement opposing the bill a couple of hours before the vote. Even so, we see a changing tone in sentences like the administration is eager to work with Congress to ensure a comprehensive and balanced regulatory framework for digital assets, compared to the previous uncompromising statement intending to veto the Senate and House votes to repeal the controversial SEC rule. Perhaps Dems realized that harsh anti-crypto rhetoric wouldn't help them in the run-up to the November election. Adding even more fuel to this speculation, Mark Cuban, the billionaire investor, said that an anti-crypto stance could cost Biden the presidency. In Venezuela, authorities have announced a Bitcoin mining ban and confiscated over 11,000 miners in response to the nation's energy crisis, with plans to disconnect all cryptocurrency mining farms from the national grid. This is a stark statement that investors of all types, whether large institutions or individuals, need to do their due diligence on a number of fronts before deciding on a mining location. So that's all we have for this one. Make sure to like the video and subscribe for more content just like this. Till next time.